How you going, Mark? It's Crashman111. You can also call me John. I'll be looking at Ethereum today, ETHUSD. It'll be on the Kraken exchange. So that's it for today. Today's date is Sunday, the 16th of December. It's 2:12 p.m. I've started the chart on the weekly time frame, and I've already identified a pattern. I'll just remove this for now. We'll look at this on the weekly time frame. As we can see here, we've had the big run up, the big rally, and the big fall back. So we've had a fall back, another mini rally, and then another fall down to give us a lower low. Now, any lower than this, and it's going to make all-time lows. I just want to pay attention to the volumes, and we can see here big spike in volume, and that was when someone smart has been accumulating, and then the price took off. Up the top here, we can see that the big candlesticks had low volume. This is a sign of weakness. So when you've got big candles and not a lot of activity, then that's obviously moving on low liquidity, and that's not what's favorable in these circumstances. As you can see here, these green rallies up here, they were okay, nothing flash. But then we've had like a pattern here where the 20-day, which is the yellow, 20-day simple moving average was hit, and it created a reversal pattern on the candles there, and we've continued down. Once you got past this point, this would have been my ultimate selling point if I was trading this. So this level here, as you can see, the candle is big because many stop losses were hit, and it continued to fall. It stagnated, continued to fall, stagnated, continued to fall. So somebody is selling, but especially down here, what's interesting is all this volume at this very low area. So this shows, even though there's red candles, a little candle with lots of volume shows accumulation. These are my proprietary settings for the MAC and stochastics, and my OBV, on balance volume. This is just a quick sample. I don't really need that. That just shows me that it's pointing down. But ultimately, I look at these two indicators along with my analysis to determine the overall direction of where the price will be going. Looking at the MACD on the weekly, we can see that it's below the zero line. When anything is below the zero line, that shows that it's in a negative downtrend, not something you want to be in. So again, my pull out price would have been the crossover. Ultimately, the crossover would have been my exit signal, and then as a confirmation, the cross into the zero, that would have been my get out. And if we go to that, so here's the crossover, my exit would have been this candle up here, especially when it started going parabolic, and had it gone into the 0 point, my other selling area would have been about here. Of course, waiting too long after the crossover, something that crosses back over and it stays positive, that's just something you need to determine when you're doing the chart. So going back in time, that would have been my level to exit on. So as that was broken, you never sell on the day that it breaks. You wait till it breaks, you wait for the next day, and when the price exceeds the previous candle is when that's your signal to sell, which it didn't. So I probably would have stayed in this trade if I held on past this crossover up to around here, which is there's the breakout, and that's the confirmation breakout candle. So I probably would have got out at about 414. Enough about the past. Let's move into current day trading. It's still in a downtrend. Okay, so we can see lower low, and then it stagnated here. It was supposed to give a higher low, but it didn't. Fell through. Ultimately, your lower low is about here, but it's been quite a savage sell-off. On the weekly, we've got this blue line here. That's the 10-day simple moving average acting as a resistance. So ultimately, until this line can be breached, I will not be taking a long trade on Ethereum. let's look at it on the daily. So again, there's a simple moving average holding the price down every time. It's that green one, and that green simple moving average is a 50-day simple moving average. So ultimately, on a daily time scale, I probably won't be trading anything until we can break the 50-day moving average. A lot of people also don't like to touch anything, especially long-term traders. So you've asked me to look at the weekly. People will not touch this trade until it can get above this pink line, which is the 200-day simple moving average. Okay, so looking at the volumes here, a lot of the volume picking up in this area. Either a lot of people are buying and a lot of people are selling. So there's a transition here from weak hands to strong hands. People who are willing to take that chance with the risk-reward ratio. I'll stick to daily for now. I'll remove these moving averages seeing as we've just discussed them, and we'll go back to our trend lines. I had identified a pattern here. It's a symmetrical triangle. I actually published what would happen over here. That's publicly available, and I had measured it from the top of the symmetrical triangle to the bottom on the far edge, and measured it, and it hit the target exactly. I'll just draw it in for you again, just so you can see. That was my target, and there we go. There you go. It's hit the target. So now the price is free to move and make a new pattern and a new target, depending on where she wants to go. Okay, so I've identified these two trend lines. They were for the previous price. At the moment, I won't, like, this will still be, this line here will still be acting as a it was acting as a support, but because it was breached and broken and then confirmed broken, this line here will also be the line, will be your new resistance. So again, I won't be touching Ethereum in a long position until this line can be broken. I need to see higher lows and higher highs to show sign of strength. Ultimately, I want to see this MACD go positive. I want to see the stochastics move through this purple area up to the top, and ultimately I want to see a breaching of the moving averages to show that it's going in a positive direction. Okay, so now that if we were already in a trade and I had to determine what where the price will be going now, what I should be doing. Okay, so it's all about risk and reward. The risk here on the downside could be minimal compared to the risk, the gain that you could possibly have on the upside. So because these volumes are very high and it's not really pushing the price as savagely as it was back here, this shows to me that something is happening with Ethereum. Fundamentally, cryptocurrencies in general are looking very favorable, especially considering the attraction to them in the beginning was anonymity from the government. Now that people pay capital gains tax and they declare this stuff through the government, it's possibly something that has lost its touch with people that were using this for, laundering money or selling and buying drugs. So what I'm doing here now is I'm drawing the level resistances. We do this by picking the ultimate highs and lows in each move. Over here we've seen that this level, which again would have been, once that breach, would have been another exit signal for me, but as it's broken through, it's come back up. As it was acting as support, it would have been another resistance that this price would have had to get through. I'll just go back to the weekly. And we can see there's not many other points of level resistance. You could possibly call one here, and you could possibly call one down here. So if this price is to continue in a downward motion, we're looking at about $54.98 as a support level. On the weekly though, as we can see, a lot of volume and a very little candle. I would probably say that if this could stay green, if this could turn green, it would form what's called a tweezer bottom. Here's one over here, and that's another reversal pattern on the candlesticks. Go back to daily. So as we can see, we've come down that line, boom, broke through. This one was used as a support. It tried to get up, couldn't really keep going. Had a little reversal pattern here, broken through that line again, and now I would suspect that it's going to use this $97 level as a resistance. If it bounces off the $97 resistance and goes back down, then I would look to exit this trade once it makes a lower low off $81.10. I'll draw this line for you. I'll supply all these for you as screenshots later on. So in my opinion, it may bounce up here and then come back down to give a lower low, and it might head down to about the $55 mark. Again, take my advice, you have to be ruthless with your trades. If it's not going your way, you need to get out, keep that capital, and then wait till it bottoms. Eventually, whenever it does, you will be stress-free. You'll come to accept the loss as well, and then you can enter a trade. You'll be stress-free until it looks strong, and then you can enter the trade and let it run and ride your gains. You don't want to ride your losses. You want to cut your losses and ride your gains. If you can consistently do that, you will be a profitable trader. Okay. At the moment, I can't identify any real patterns in regards to the triangles or pennants or you know, any other sort of channels. I'll just run through all the charting tools just so you can see what else, if there are any other tools that could assist you. So going back to the weekly, there's this thing called the Elliott wave, which is 5 ways down and then 3 ways up. As we can see here, we're going to count our down pulses. We've had 1 down pulse, 1, 2, 3. So this is your third. So what would happen here is we'll have a rally. 4, 5 would be a lower low, and then you have the 3 pulses up, A, B, C, so wherever that could be. At this stage, we can't look into that or determine anything because we need to see this this chart turn around before making an assumption. But lower lows are very possible. Okay, so I'll just clean the chart up a little bit for you. So this trend line isn't even required anymore. This triangle pattern not even useful to us anymore at this stage. I'll go down one time frame. Let's look at the 6 hour. See if we can identify anything. So we can see some bullishness on the 6 hours. You can see it's really getting support here. But we also remember every time a line is a support is tested, it doesn't get stronger, it just means it's getting weaker. So people at that level that are willing to buy at that level are depleting their funds, and once their money runs out to buy at that level, it'll move to the next level where people are happy to buy at. At this stage, we can see lower lows being put in. It's going to make a high, depending on this candle where she goes. If it makes a higher high, if it can break the 92.22 level, it might push a little bit higher, but ultimately it might get up to 98.86, and that will be your next resistance on the 6 hour. moving averages, we've discussed those ones. I'll bring them up again. Again, this is another proprietary indicator which I created with code, and this just shows me all the key moving averages. So if I pull up my settings, you can just see for the colors 3, 5, 10, and the corresponding colors. 15, orange is 20, green is 50, 100 is purple, and 200 is pink or magenta. On the daily, again, we can see that 50-day really knocking that price down every time it comes to test that 50-day moving averages. It can't seem to get out. This here was a false buying signal again, but you would have had your stop loss in place, and if it didn't go your way, this would have been an exit. So it's looking positive at this stage in the short term, very short term on the daily. And that's on the moving averages. We'll look at the Fibonacci retracements. There's multiple that we could use here, and ultimately we'll go from a high to low. We'll draw that in for you. High to low, and if this was to be the lowest point, then a 50 ultimately the typical retracement is between 38.2% and 61.8%. So you could see the price 540 at this stage, where you'll start finding any sort of resistance is between 543 and 365. That's our retracements here, but then every little Fibonacci has its own Fibonacci within the Fibonacci's, which is how Fibonacci works. But at this stage, let's have a look at this. Even down here, could possibly see a retracement to the 151 level. But we've got to see if this bottom creates a double bottom pattern, boom, boom, goes down, and then it can push back up from here. We don't know what's going to happen. It's just really hard to tell. Okay, so we've looked at the Fibonacci. We'll do the Gann fan. This is a favorite tool of mine because I'll show you how I use it. Again, we'll go from high to low, and the explosive power in the Gann fan will happen when it can break out of the Gann fan. So if the price can ever recover back up to about the $1,200 or $1,300 mark and get through here, you'll see exponential move to the upside. As an example, I'll show you this high to low here, and then once it broke out, came back through, but it did essentially go out and off she went. And you might get other moves like that into the future. But at this stage, the Gann fan is hard to use because we're not in an uptrend. It's hard to use and say where it's going to go. If we use it in the other way, we'll get a low here and a high here, and we'll get an explosive move to the downside if it breaks out, and which it's done, and there's your explosive moves. It's pretty not looking very favourable. We can look at forks. This is the pitchfork. Let's try and search high, low, high. There's different settings for this pitchfork. I'll just run through them. It's a modified shift. It's the original shift, and the inside. So the inside seems to be the one that's working at this stage, and every level in here will be acting as a support and resistance. We can see resistance, resistance. This line here is acting here as that's a support. Broke through. Here's a new line that'll be following. Broke through. Came back. This line here might act as a resistance later on, but again, it's in a downtrend, so again, we won't be looking at it until we can get higher highs and higher lows. There's no gaps in the price on the weekly. And when there's a gap, what usually happens is the price will always tend to want to close the gap. If I can find a gap in the past as an example. Can't really see one. No price gaps. That's very interesting. But generally what happens is it'll gap down, and then the price will always work its way back up to closing that gap price, and then it'll continue in its direction. The only time that you can ignore a gap is when the volume is very, very, very high and it shows a clear movement by the buyers or sellers in a particular direction. We've had a look at the volume spread analysis. So we've looked at the volumes, and as I said, due to these really high volumes, especially down here in the price range, I could see some strength. However, it's all about hope and not really trading. To be trading, you need to have a clear, defined set of rules to be trading, and at this stage, none of this is showing, giving me a signal to enter this trade. I want to see, although I might not be buying at the complete bottom, which could go lower, I pay that little bit more, maybe around here, or once we break these resistance levels, as insurance. It's like an insurance cost. You pay a little bit more for it, but because it's showing a clear direction to the upside, then you could have more confidence. So at this stage, people would be looking at this and be iffing because of these volumes. So if you're going to take a short position, I'd probably talk you out of that one as well. I'll probably be waiting for the chart to show clear direction at this level, up or down, before making any further moves. Any risk rewards? So again, going back to the weekly. Being conscious of where the price may go, I would probably put it there. $54.98, so $55-ish is probably where I would consider the next level of resistance. And if I was going to take a short position, I'd be looking at that being my take profit. And if I was to be taking a stop loss on a short position, I would probably be putting it way up here. So the risk reward is not worth it at this stage. It's got like a let's go to short position from here. Green is your profit, pushing that all the way to this line and taking a stop loss about here. Your risk reward ratio is not even a 1-to-1, it's a 0.13, so not worth taking. As a long position though, from here and using this level here as your stop, so we'll just put it a few lines underneath with a possible run up back to this level. You have a 5.46 to 1 win versus a 1 loss, so it's a a good 5.5 to 1, but you must cut your trade if it breaches this line. You can breach slightly, but essentially you'd be wanting to cut it, otherwise this whole risk reward theory is out the window. One final look, review. I can keep drawing lines in. I can always consistently draw lines in, connecting the lows. And this one seems to be another support line, but I wouldn't be trusting it because this was probably another support line. That would probably be a bit better one to be running off, but it's running on the support line. It's very close to comfort. You know, our MACD is negative. We have some small signal here to the upside, but what we want to see is this sort of motion. So we have from this level here, a higher high, and then when it does push back down, we get a higher low. We do not want to see this. This means that this might not make it as high and only make another lower high, and then on and on downwards we go. That's it for now. If there's anything else, I'll send you this video. If there's anything else, stay in the chat on Fiverr. I'll monitor it a little bit with you as well for over the next couple of days, and we'll go from there. If you need any more, just ask, and I hope that you like this analysis and you put future orders in with me in the future. Have a good one, Mark.